Global share markets notched repeated new highs in September, historically the worst month for equities, fueled by optimism for interest rate cuts and solid corporate earnings. The MSCI All Country World Index rose by 3.5% in September, lifting for a sixth straight month. After a 7.3% rise in the third quarter, world stocks are now up over 17% or around $15 trillion in 2025. Investors look past sticky US inflation data and US President Donald Trump's latest round of tariffs, including 50% duties on kitchen cabinets, 30% on upholstered furniture and 25% on heavy trucks due to take effect on October 1. The announcements didn't spark the kind of market volatility seen in April after fresh US economic reports underscored the US economy's resilience. The US Federal Reserve cut the benchmark borrowing rate by 25 basis points on September the 17th and penciled in 2 more rate reductions this year, following months of intense pressure from the White House to slash borrowing costs amid growing signs of weakness in the US labour market. Fed Chief Jerome Powell warned market participants about high stock market valuations in a speech, with the US S&P 500 index trading at nearly 23 times forward earnings estimates of constituents, around its highest in 5 years and well above its long-run average of 15.9 times. Stateside, the S&P 500 index has risen over 13% so far in 2025, on track for its third straight year of double-digit gains. It is up 32% since its low for the year in April and has soared 7.8% in the September quarter, for its biggest third quarter gain since 2020. In the month of September, the index was up 3.5%, its biggest September percentage gain since 2010, with shares of Warner Brothers Discovery surging 67.8% on reports that Paramount Skydance was preparing a takeover bid. Shares of AppLovin surged 50.1% to record highs as the marketing and advertising software company joined the S&P 500 index on September the 22nd, and Wall Street analysts hiked their price targets. Intel shares jumped 37.8% after Nvidia said it would invest $5 billion in the struggling US chip maker. At the other end of the spectrum, CarMax shed 26.9% after the used car retailer reported lower second quarter profit. Shares of financial data company FactSet came under pressure, down 23.2% on investor concerns about AI-related disruptions. Kenvue shares slid 21.6% in September after US President Donald Trump warned about an unproven link between Tylenol use during pregnancy and autism in children. Elsewhere, the blue chip 30 stock Dow Jones Industrial Average gained 1.9% for its biggest September gain since 2019. The Dow climbed 5.2% in the third quarter. IBM shares were the strongest performer on the Dow, up 15.9% in the month as optimism grows surrounding the company's quantum computing business. Holding back the Dow, shares of Nike fell 9.9% as sales declined 1% on a currency-neutral basis in the company's most recent quarter. The tech-heavy Nasdaq index gained 5.6% in September and surged 11.2% in the third quarter for its biggest third quarter gain since 2010. Oracle soared 24.4% in the month of September after the tech company pointed to a demand surge from AI firms for its cloud services. Micron Technology was up 40.6% as the AI stock beat Wall Street estimates in its fiscal fourth quarter, as well as its guidance for the current first quarter. Apple rose 9.7% as its latest iPhone went on sale around the world, while EV maker Tesla shares jumped 33.2%, following the approval of CEO Elon Musk's compensation package. The Aussie share market lagged its global peers in September, with the benchmark S&P ASX 200 index ending the month down 1.4%, snapping a 5-month winning streak, its worst month since March. That said, the Aussie benchmark index still logged a 3.6% gain in the third quarter. The Reserve Bank of Australia left the cash rate target unchanged at 3.6%, as widely expected, and flagged future rate cuts are being data dependent, saying recent data suggested inflation might be higher than forecast in the third quarter. Domestic economic growth gathered pace in the June quarter, supported by lower borrowing costs and moderating inflation, but employment updates were mixed. 10 out of 11 ASX 200 sub-indexes fell in September, with the energy sector the biggest drag, down 10.6%, after a surprise announcement by OPEC about raising oil production led to a concern about a supply glut. Shares of Santos dropped 13.9% after an $18.7 billion purchase bid from a consortium led by Abu Dhabi National Oil Company collapsed. Consumer staples stocks dipped 5.6%, with bigger cheese shares down 11%. The healthcare sub-index fell 4.9% to near two-year lows amid a global sell-off in pharmaceutical companies. CSL tumbled 5.8% as traders weighed the impact of new US import tariffs on branded drugs on their biotechnology giant. In terms of individual stocks, patent and trademark firm IPH was the worst performer, down 21.9% after CEO Andrew Blattman warned of a decline in US market patent filings. Shares of Bapcor slid 19.1% in September as broker Citi lowered its earnings forecast for the auto parts retailer on expectations for higher costs. Australian gold stocks climbed 24.4% to an all-time high in September as bullion prices rose. After listing on the ASX in June, Greatland Resources jumped 35% in September after the gold miner swung to profit in financial year 2025. Pia Regis Resources gained 33.7%, pushing up the materials sector by 4.6% during the month. Shares of DroneShield surged 41.2% after the defence technology firm announced it would expand research and development operations in the United States, adding second location headquarters in Virginia. Looking ahead, the December quarter historically tends to be a positive one for US stocks. The S&P 500 index has gained 74% of the time in the fourth quarter, but worries about a possible US government shutdown loom large. The Fed is expected to move again in October. China holds its plenum gathering of top party leaders. US President Donald Trump and China's President Xi Jinping are expected to get together to discuss trade at some point. And there are the IMF World Bank meetings and US Climate Summit to look forward to as well. Thanks for your time.